Hello, I'm Don Lam, co-founder and CEO of VinaCapital, and welcome to our 2021 Investor Conference. Once again, coming to you virtually. I know many of us hoped that this year's conference would be held in person, but the outbreak of the Delta variant has certainly dashed hope around the world for a quick return to what we once knew as normal. Here in Vietnam, we are emerging from a long battle against an outbreak in Ho Chi Minh City and the surrounding region. Just in a few months, the country has quickly ramped up vaccination in Ho Chi Minh City and Hanoi, as well as in key manufacturing regions, and the pace of vaccination will continue to be high in other cities and towns for the remainder of the year. We all know vaccination are key to fully reopening the economy, and we are firmly on that path forward. I know that is the key issue on all of our minds. In the past few weeks, I accompanied the President of Vietnam, Mr. Nguyen Xuan Phuc, at meeting in New York, as well as Mr. Vương Đình Huệ, the Chairman of the National Assembly, at meeting in Europe. They took the time to meet with foreign investors, and one thing quickly became clear. Foreign investors are eager to get back to Vietnam and continue investing in what they still consider to be one of the most exciting markets in the world. As you will hear in the session that follow, VinaCapital has been busy as ever before. Despite the fact of the outbreak of the Delta variants, VOF, our multi-asset flagship fund listed on the LSE, reached new high earlier this year. Our open-ended fund like VVF and VAF also did very well, outperforming the Vietnam index and ranking among the top performers in their category. Our domestic funds are also outperforming, and we continue to launch new products in the local market to capture the tremendous interest Vietnamese investors now have in the stock market. On the other side of our business, VinaCapital Venture, our technology investment platform, have been working closely with portfolio companies to help them get through this period and have announced several new investments, with more to come. Our real estate group had relaunched the Vina Living brand and had several residential projects underway. ESG issue had taken center stage when it comes to investing, but it had long been part of our investment process and how we have operated. We may not have been the loudest voice about ESG issues, but we have been very active in a number of ways. In addition to being a signatory to the UN-supported Principle for Responsible Investment, we have led several initiatives in Vietnam around the issue of sustainability, including co-founding the Institute for Circular Economy Development with Vietnam National University in Ho Chi Minh City. This think tank is bringing together academia, businesses, and the government to find practical solutions to the environmental challenges Vietnam faces. Furthermore, VinaCapital has been at the forefront of developing clean energy solutions to help power Vietnam's continued growth. In March, our partnership with GS Energy received an investment certificate to build a 3,000 megawatt LNG power plant in Long An provinces, which is the first project in the country to convert a planned coal-fired power plant to LNG. We have also seen enormous growth in our SkyX rooftop solar business, and we are working on additional renewable energy initiatives. It is clear that clean, renewable energy is critical to Vietnam economically and environmentally, and we intend to continue playing a leading role in its development. On a final note, the pandemic and extended restrictions have presented enormous challenges for many companies. As a private company, VinaCapital is fortunate to have been able to remain focused on the long term, investing in our platform and our staff for the benefit of you, our client. I'm proud to say that we are in an even stronger position today than we were 1 year ago. The opportunity to invest in Vietnam remains abundant as ever. While the outbreak has been extremely difficult for everyone, better days are surely ahead. As soon as travel becomes easier, I hope to welcome you back to Vietnam in person. Until then, please feel free to contact me and our team to learn more about VinaCapital and investment product and platform we have to offer. Thank you. Now I'll turn the stage over to Eric Levinson, our Head of Business Development, to walk you through our agenda for the conference.
Thank you, Don, and good afternoon, everybody. It really has been a very exciting last 12 months for VinaCapital. And Don, thank you so much for continuing to invest in our platform on behalf of our clients. So I'll be your host for the 4 sessions we have today, tomorrow, and then next week. And so let me walk you through what our agenda looks like. We're going to do 4 sessions, each approximately an hour, so a little bit shorter than last year. Today on day 1, we're going to hear from Brook Taylor, our COO and Chief Executive Officer of the Asset Manager, for an update on VinaCapital. And then we're going to focus on the Vietnam market and the economy. On day 2, we're going to hear an interview with Mr. Tra Le, the CEO of the Ho Chi Minh Stock Exchange. We're very lucky that he'll be joining us. And then we'll hear an update on our offshore funds, VVF and VAF. On day 3, we'll be dedicated the entire hour to VOF, our flagship London Stock Exchange listed closed-end fund. It's $1.3 billion, a combination of private equity and public equity. And then on day 4, we're going to highlight our alternatives platform and hear from our leaders in green energy, real estate, and venture capital. We'll also have our leader of financial services, with banks being such a large part of the VN Index. We're going to cover financials as well. So with that, I want to introduce Brook Taylor, our COO and CEO of Asset Manager, to really provide an update on what we've done the last 12 months and what we're doing in the future to continue to serve our clients. Thank you very much.
Welcome everyone to the 2021 VinaCapital Investor Conference. I know that there are many familiar faces out there that have been regular attendees over the last 15 years that we've been holding this event, but there are also a lot of new faces as well. Welcome everyone. I hope you'll find our presentations over the next week valuable. When I stood before you last year, Vietnam had done a great job responding to COVID. There was a general sense that the country would cleverly escape the worst of the crisis and that things would be back to normal within 12 months or so. But as we now know, that thinking was optimistic. What had really happened was Vietnam had successfully bought time to escape the worst of the COVID pandemic. Keeping COVID under control by preventing its spread gave Vietnam time to source the vaccines and treatments that the country could not access early. Undoubtedly, it saved thousands of lives. Although there has been some press questioning the country's response to COVID, we know that Vietnam will be back on its aggressive growth track very soon. And there's evidence on the ground that this is happening already. An effective vaccine program, which only started in April this year, has resulted in almost 100% of the adult population in the 2 major cities having at least 1 vaccine dose, and over 50% having a second dose. The effectiveness of this program and the other countermeasures implemented have allowed the government to announce an opening plan that will see things return to normal by the 15th of January. On the 1st of October, most services that people need were allowed to reopen. This has definitely created a sense of optimism and excitement on the streets of Ho Chi Minh City and Hanoi. I mentioned it last year, and it's worth mentioning it again today. We still believe Vietnam is a net beneficiary from global events that have shaken us all. Things have got a bit rocky in recent time, but Vietnam is quickly getting back on track. Vietnam continues to be one of the best investment opportunities in the world. During this crisis, we've been able to reinforce our mission and place even greater emphasis on delivering it going forward. As a private company, we have the luxury of being patient and able to invest long term, which is exactly what is needed for successful investment in a country such as Vietnam. Our position this time last year was strong, and we're in an even stronger position now, despite the challenges of COVID. The COVID crisis has created a challenging investment environment, but as we're based in Vietnam and have an intimate knowledge of the market, we've been able to spend considerable time thinking through the COVID response scenarios and exploring investment themes related to them. As I already mentioned, we expect Vietnam to advance strongly in the coming year, and we're determined to identify and invest in those opportunities that present the greatest potential. We're also heavily investing in our people, particularly our investment, business development, and risk management teams. Our current staffing is 168 people, up from 156 last October. New hires have been made in our specialist investment teams and business development, and we are actively seeking to fill positions in compliance, risk management, and ESG to support our expanding business. Those investors that receive our regular newsletters or watch our video blogs will appreciate the improvement in the quality and quantity of our communications. This is a result of listening to our clients who wanted to hear and read more thought leadership from our in-house research team. We've also made a number of improvements in our client management systems and interfaces, and look out for our redesigned website that will go live next year. These enhancements will help us to better serve our investors and deliver a higher level of service. Our mission is to help our investors prosper by realizing Vietnam's rich opportunities. We understand the full potential of Vietnam and where it's heading, and we know how to lead our clients into those areas and opportunities that offer the greatest rewards for the investment they want to pursue. We are Vietnam-focused investors. We have been investing in the country for over 18 years, and during this time, we've built up a deep experience across all sectors, all asset classes, and all investment structures. Today, this puts us in a unique position of being able to provide investment solutions to any investor seeking exposure to the country. In doing so, we can give our clients access to the full range of investment opportunities in the market. Many of the best investment opportunities do not appear in public markets. Our diversified range of investment mandates means more opportunities come through our doors. Business owners and advisors understand this and come to us knowing that we have the resources and expertise within our business to provide them with solutions. We also make better informed investment decisions because we can draw on our deep range of investment experiences across any given industry. For example, our expertise in real estate gives us unique insights into listed companies that operate in that sector and the development of prop tech within the venture capital space. Through our extensive network of relationships across all industries and sectors, we can source better investment opportunities, manage risk better, and assist portfolio companies. If we look at the makeup of our AUM, then you will see we have significant investments across all asset classes. In all asset classes, we're a top 3 player. We appreciate the importance of investment managers being focused, and we achieve this through having experienced, dedicated teams for each fund or asset class. We believe that to fully realize the opportunities that exist in Vietnam today, our clients need an investment manager that harnesses expertise across all sectors and all asset classes. We are especially proud of the performance our listed equity, private equity, and fixed income fund investment teams have delivered this year. The nature of the industry means that it's not always easy to deliver performance consistently, but our teams have done a great job in a very challenging market to significantly outperform each fund's respective benchmark. We also aim for each fund to be in the top quartile of its respective peer group, which we have consistently delivered upon. In fact, year to date, many of our funds have gone one better, and are top performing funds in their respective peer groups. In a market such as Vietnam, great performance is built on quality research and careful stock selection and portfolio management. We've seen great recent performance, but I want to emphasize that our investment philosophies focus on achieving performance over the medium to long-term timeframes. So don't be discouraged if you missed out on the most recent rallies. We are still working hard to continue to build on our recent successes. Our alternatives teams have also completed some landmark investments over the last year. During the year, our VinaCapital Ventures team has continued to deploy funds into leading tech startups. Its most recent investments into DutyCast, GoStream, and Global Care are all high potential opportunities. DutyCast and GoStream are particularly interesting examples, as they are proof that great ideas with global potential can be found in Vietnam. In March, we announced our joint venture with GS Energy to build the Long An gas-fired power station. This project will eventually provide 5% of Vietnam's electricity needs. One particularly interesting aspect of this project was that we successfully convinced the central government authorities to change a project that was approved as being coal-fired to being gas-fired. This was the first such approval, and it's opened the doors for other delayed energy projects to move forward using a cleaner fuel source. Finally, it's worth noting our recent sale of a controlling stake in SkyX Solar to EDF Renewables last week. Seeing an opportunity to build a successful green energy business in 2019, we set up SkyX Solar, which has now become one of the leading rooftop solar businesses in the country. The partnership with EDF Renewables will help it to grow this business further and serves as an important case study for additional co-investments with this leading clean energy partner. In September, we launched the VinaCapital Liquidity Bond Fund. Marketed as Smart Cash Management, our latest mutual fund product is Vietnam's first money market fund specifically designed to help companies and individuals improve returns on short-term cash holdings. With expected returns above 4.4% and money on call, this fund is a great alternative to holding cash in a bank account, and we see it as having huge potential as companies and individuals seek higher returns on their short-term cash holdings. We take responsible investing seriously and believe a focus on ESG issues is essential to long-term sustainability and success. We recognize that investors want responses to ESG issues to be a bigger part of our research and portfolio construction process. We have been signatories to PRI since 2018 and have incorporated responsible investment into our investment processes since that time. All of our private equity investments go through a thorough ESG evaluation process based on a methodology developed by the Dutch development bank, FMO. We also use external ESG professionals to help us assess particularly challenging investments. As a double check, our risk management committee ensures that all significant ESG issues are raised and considered during the investment consideration. We have also developed a comprehensive rating system for evaluating the ESG standards of public companies. Those ratings are included in our research papers for our portfolio managers to consider. We will engage with the management of those companies we own that have low ratings to educate and encourage them to improve their practices. We're sensitive to greenwashing, and for that reason, we are naturally conservative when making claims about our ESG standards and practices. We do not make claims of fact that cannot be substantiated. Finally, I'd again like to highlight the work of the VinaCapital Foundation. Founded in 2006, the VinaCapital Foundation is the largest corporate foundation dedicated solely to improving the lives of children in Vietnam. Over the last 15 years, it's saved the lives of over 8,700 children by providing much-needed heart operations, and in doing so, it's alleviated the hardship felt by many families in the most vulnerable communities in Vietnam. The last year has been particularly challenging for the foundation because it has had to focus its attention on alleviating the hardship that many people have experienced from the COVID crisis. In the last year, in addition to providing life-saving operations to over 300 children, its Help Vietnam Breathe campaign raised over $1.1 million from the corporate sector to purchase 58 ventilators and PEP equipment for hospitals. These ventilators have and will continue to save the lives of many vulnerable people in Vietnam. Again, thank you for your interest in VinaCapital and in Vietnam. We look forward to working with you in the coming year and hope that next year we can all get together in person.
Well, Brook, thank you very much. And it is really exciting that we've been able to do these types of investments, particularly during the challenging COVID times. Now, you may have actually noticed that Brook is actually not with us here in Ho Chi Minh City. So as Vietnam has opened up, several of our colleagues have left Ho Chi Minh to visit with clients. So you'll actually see that as a theme throughout the next couple of days. Now, with that, today we turn our focus to the Vietnam economy and the Vietnam stock market. Now, hopefully you're familiar with our next speaker if you follow VinaCapital closely. Michael Kokalari, our chief economist, publishes bi-weekly insights. Hopefully you're receiving them. If not, please send us an email and we'll add you to our distribution list. And we've asked Michael today to talk about really forward-looking, what is the view for Vietnam post-COVID? Obviously, he'll touch on Q3, which was the first negative quarter in GDP growth that Vietnam has had for 20 years. But really the focus is going to be forward-looking. After Michael's presentation, we'll be joined by Kyle Kelhofer, the IFC country manager for Vietnam, and Ismael Pili, our head of research, and the three of them will do a panel discussion. So with that, let me bring up Michael for his presentation. Thank you.
Thank you, Eric. I have two main messages for you today. And the first is that Vietnam's growth story has not changed this year, despite everything that's happened. All the growth drivers that we've been talking about for years, FDI inflows, emerging middle class, et cetera, they're all still there. Everything is still intact. So that's the first key takeaway. The second key takeaway is that COVID will ultimately strengthen Vietnam's economy. Now, COVID has obviously been a terrible human tragedy. It's been a terrible economic crisis. As Eric mentioned, we've had terrible GDP in Q3. It really is the most difficult economic conditions since the 1980s in Vietnam. Vietnam had some of the strictest lockdown measures anywhere in the world. FDI factories operated under extremely difficult faced extremely difficult operating conditions, particularly in the south of Vietnam, where most factories were either closed or were compelled to operate at very limited capacity. This in turn created a lot of very negative publicity for Vietnam in the Wall Street Journal, in the Financial Times, the New York Times, et cetera. As you can see on the screen, there were many articles published about FDI companies reconsidering Vietnam as a production base. FDI is Vietnam's most important growth driver. So when you see these kind of headlines, that's a real crisis. We won't sugarcoat how difficult things have been here this year, and probably will continue to be for the next months. I personally don't expect Vietnam to really get back on track and for us to enjoy the kind of vigorous growth that we have seen in the past, probably until maybe the middle of next year, maybe a little bit before the middle of next year. It's likely that 60% of the population will be fully vaccinated at some point in Q1. So it is a very, very difficult condition. And as I mentioned, the economic condition is the most challenging since the 1980s, in some ways more challenging than the 1980s. For those of you that follow Vietnam, you will probably know that after the challenging economic conditions of the 1980s, that was when the so-called Doi Moi reforms came about that paved the way for Vietnam's rapid growth for the next 30 plus years. Now, I think that the current COVID crisis is so severe that I think what you're going to see is a kind of Doi Moi 2.0 that comes out of this, with many structural reforms, improvements in the economy, both in government and in industry. So I mean things like more infrastructure development, companies adopting international best practices, things that will ultimately support the country's growth for the next 10 years. And frankly speaking, issues that really should have been addressed a long time ago. Infrastructure development, for example, is not really that complicated. Many countries around the world have developed their infrastructure, and it certainly was not a financial issue, why it hasn't happened more rapidly here in Vietnam. It really was just a complacency issue. And so I think that the COVID crisis is so severe that it's going to shake up this complacency, and that you will see a lot of improvements in the economy, in the structure of the economy going forward because of this crisis, the same way that the 1973 oil crisis in Japan resulted in many improvements and structural improvements in that country's economy. Now, in the early 1970s, Japan economic miracle was full steam ahead when, bam, they had a terrible oil price shock. The price of oil went up in the world about 4 times in 2 or 3 years. Japan imports all of its oil. So at that time, as you can see on the screen, people were very, very pessimistic about Japan. They believed that the Japanese growth miracle was over. This quote from the New York Times at that time, 1973. Well, of course, that's not what happened. What happened is the Japanese implemented a series of reforms, both in government and in industry, that ultimately paved the way for the country's growth for the next 15 plus years. I think that Vietnam today is at a similar juncture. As I mentioned, I think we're about to have a kind of Doi Moi 2.0, in which a lot of structural improvements take place. Now, the caveat to this is that this is not automatic guarantee. As you can see on the screen here, I have highlighted some countries which, when they faced a crisis, enacted structural reforms that led them to strengthen themselves after the crisis, and others that didn't. And interestingly, you can see that Japan appears actually 2 places on this slide, because in 1973, Japan fixed all their problems. In the 1990s, they didn't, and as a result, the country's economy languished for years afterwards. So Vietnam will need to take the right steps in response to the COVID crisis to strengthen itself going forward. It's not a guarantee. But based on my 10 plus years of working and living here in this country, I think that is what you're going to see. I think there will be a lot of improvements going forward that will strengthen the growth going forward. And by the way, I'm not the only one who thinks this. In some of my private sort of off-the-record conversations with some senior advisors in the government, some people in the World Bank and others, several of us have come to the kind of similar conclusion at the same time. But that is one, that's a caveat. They have to take the right steps. The other thing I want to mention before I go on to talk about the optimistic picture that we see ahead for the next 5 to 10 years is I want to mention or highlight that last year in 2020, and again this year in 2021, we at VinaCapital, me specifically, were much more pessimistic, I would say realistic, but we were much more pessimistic than anyone else in the financial industry here. We had much lower GDP growth forecasts than everybody else. We were the first ones to just really slash our expectations about growth, particularly when the Delta variant first emerged. And the reason I'm mentioning this is because I want to give myself some credibility for the optimistic picture I'm about to paint for you. We were much more pessimistic, again, realistic, than everyone else. And I think we're much more realistic about how good the next 5 to 10 years are going to be. And the reason that we're very optimistic is, as you can see, all the growth drivers that have propelled Vietnam's growth that we talk about all the time, they're all still there. They're all still intact. The FDI story is still intact. Now, I know that I just showed you kind of a very scary a slide with a bunch of scary headlines, and I'll come back to that in a second. But the FDI story is still intact. At last year's investor conference, we talked a lot about the idea of FDI companies forming linkages with local industry. That story is still intact. The emerging middle class story, urbanization, less than 40% of Vietnam's population lives in its major cities. That's still intact. We still have a very wonderful contribution of women to Vietnam's labor force and to the economy here. That story is still there. I have some really good news to share with you about infrastructure development. And you'll see one more point on this slide, which is something new that we haven't talked about before, which is this whole digitization story. Now, I'm not going to talk too much about that today. First of all, there's so many amazing things that are going on that this could really be the source of a whole nother webinar, and maybe someday we will do a whole webinar on that, fintech and e-commerce, some of which VinaCapital is involved in, by the way. And the other reason I won't get too deep into this is because you already know the digitization story because you're experienced it in your own home country. You're watching me right now on a digital platform. The point I want to make here is whatever you've been experiencing in your own home countries over those last 2 years, it's also happening here. The World Bank did a survey last year, and they found that 60% of Vietnamese companies had either started to engage with their customers digitally or had increased their level of engagement with their customer, intensified their level of engagement via digital platforms. That was a survey they did last year, 60%. I can guarantee you that number is much, much higher now, just seeing how things are working in the economy here. So these are the growth drivers. Here is a real-time update of what's happening with FDI. Now, as you can see on the screen, the planned FDI inflows to Vietnam in the first 9 months of this year are up more than 20%. 22% year on year in the first 9 months. And to be clear, what this number is FDI companies that are planning to set up a new factory in Vietnam, expand the capacity of an existing factory, electricity generation is also in there. This number, the plus 22%, this number is usually a double-digit number in Vietnam all the time. I mean, the FDI is going up a lot every year. But plus 22%, this is a big number even for Vietnam, and especially considering everything that's happened earlier in this year and those headlines that I showed you before. It's driven by high tech. It's driven by Samsung, by LG, by Toshiba. You can see on the screen here that there's an FDI survey from Deloitte published a couple weeks ago, last month. This is not something that I cherry-picked from sort of a year ago when we were getting praised about a lot of things. So literally a few weeks ago, Deloitte publishes a survey that Vietnam is still the #1 choice for Japanese investors, still the #2 choice for Singaporean investors. So the FDI story is still very much alive, and it's driven by high tech. Now, how do I reconcile for you this very optimistic slide with the one I showed you at the beginning of the presentation with all these negative headlines? Here's the story. If you go back and you read all those articles that were with the headlines that I showed you in the beginning, what you would see is that the companies that are reconsidering Vietnam or moving some of their production to Bangladesh or moving some of it back to China, these firms all produce t-shirts, shoes, furniture, Christmas ornaments. Basically, these are the producers of low value-added products. Go back and read those articles. You will not find one company mentioned in any of these articles that's thinking about moving their cell phone production from Vietnam to Bangladesh. It's not going to happen, okay? The other thing I want to highlight for you is this story of the producers of low value-added products moving from Vietnam, going to countries with even lower wages than Vietnam. This is not a new story. This has been happening for the last 4 or 5 years. Back in 2019, when the US-China trade war was really taking off, there were similar headlines at that time about the manufacturers of t-shirts, saying we want to go to Bangladesh. Because what was happening in 2019 was there was so much high-tech investment that was coming in that it was pushing up the wages and industrial production, IP land rents. So this is not a new story. We've already seen headlines like that a few years ago. And I think the right way to think about it is it's kind of a version of what the economist Joseph Schumpeter would call creative destruction. So basically, the low value-added things are going out, the high-value things are coming in, we're moving up the value chain, and COVID simply accelerated this. COVID has accelerated a lot of things in the world, so this is another story along those lines. Now, since I showed those headlines at the beginning of my presentation, I want to wrap up that story with one more interesting point, which is that at the time that these headlines were being published about, some producers are going to move back to China, in the month of September, I'm talking about just literally a few weeks ago, there were still stories about factories in China that want to move to Vietnam. You can see it on the screen here. So the story is still intact. Factory wages in Vietnam are 2/3 below those in China. The quality of the workforce is comparable to China's, according to surveys from Jetro and others. The US-China trade war is unfortunately not calming down under the Biden administration. The geography of Vietnam, the location. And there's also a little bit more of a subtle factor that we've talked about many times in the past, which is that both Japan and Korea face a situation which is known as secular stagnation. Both of these countries have to move their production, shift more of their production outside of their home countries. And Vietnam is the most obvious place for them to come. So nothing on the FDI story has changed. And also, as you can see on this slide, nothing on the demographics story has changed either. By definition, demographics doesn't change rapidly. It's very slow. What you can see on this slide, on the left chart, this is a chart that shows you when do people spend the most money in their life. And this chart is not just for Vietnam, it applies across a whole range of countries. So people tend to spend the most money when they're in the 45 to 50-year-old age bracket. That's what the chart on the left shows you. What the chart on the right shows you is how many of these peak spending people, in absolute terms, millions of people, how many of these high spending people do we have in Vietnam? So you can see the chart on the right shows that every year, the number of these peak spending people keeps going up, another 500,000, another 600,000. Now, when the number of peak spending people in a country is going up and up and up, that country is on a secular economic uptrend. You can see here that in Vietnam, it was around 1990 that this cohort of these peak spending people started to really go up. Well, from that time until now, the World Bank estimates that about a third of Vietnam's economic growth, GDP growth, is simply from demographics. Of course, the Doi Moi reforms, FDI, all that has also helped and explains the other 2/3. But think about that for a second. A third of our growth was basically baked in just because of demographics. And what you can see on this chart is we've got another 10, 15 years of just baked in growth from this peak spending cohort going up year after year after year, okay? These positive demographics, combined with urbanization I mentioned before, we still have a lot of people that need to move to the city, move from the farm to the factory, and combined with the idea that all this FDI inflows raises people's income, these three elements, when you mix them together, this is where the emerging middle class story comes from. So that story is still very much intact, hasn't changed at all, and has very strong demographics support behind it. Another demographic-related issue is the strong role of women in Vietnam's economy. And what you can see on this slide is that the contribution of women to Vietnam's economy is at the Sweden-type levels. In fact, I've had somebody tell me that actually my number here is not too low. It's actually even higher than that, higher than Sweden. That's a quantitative issue, but there's a really interesting qualitative story here too, which is that, as you can see, the representation of women in the top management positions, CEOs in Vietnam, is very high compared to the rest of the world. I'll mention one other thing about this, which is that my boss, Andy Ho, the CIO of VinaCapital, who I have a tremendous amount of admiration and respect for, has written a book called Crossing the Street, which is about the VinaCapital private equity team's investment activities. And there's a bunch of really neat stories in this book. One of the things that they also got into in this book is they talked about this idea that when a company has a woman CEO and a female management team, that's a plus for them in investing in that company. And I urge you to read the book. It's got lots of interesting stories and also discusses this topic. The very last growth driver is we're also very optimistic about the infrastructure spending story in Vietnam. We expect infrastructure spending to increase by 40% in the next 5 years compared to the previous 5 years. The government enacted a plan earlier this year in July for calling for almost 40% increase in infrastructure spending, and we do think that that is going to happen, partially because of this Doi Moi 2.0 type story I mentioned before, and also because the new prime minister who took over the job earlier this year, his background is in infrastructure development. He made his name earlier in his career developing the infrastructure of his province. So he knows how to get things done with PPP, public-private partnerships, et cetera. So he has a really strong track record in that. So these are the key growth drivers that are going to push the country's growth going forward. And something very, very important is, in addition to these factors, growth drivers not changing, the other thing that has not changed is that the context or the macroeconomic environment for all these things to play out remains extremely stable. The government continues to be very focused on maintaining kind of a steady level of inflation. This year, we saw that the value of the Vietnam dong appreciated by more than 1% year to date, which is pretty incredible when you think about it, given everything that happened with COVID. And also given the fact that, as you can see on this slide, Vietnam's currency was one of the only currencies in Asia that actually appreciated against the dollar. Almost every other currency depreciated against the dollar. Now, in conclusion, the government's continued focus on macroeconomic stability, the fact that all of Vietnam's growth drivers are still intact, these Doi Moi 2.0 reforms that we expect, all of this means that we remain very optimistic about this country's growth prospects over the next 5 to 10 years as we come out of and rebound from the COVID crisis. So I want to thank you for your time today. And now I'm going to pass it over to Kyle at the IFC, who's going to give us his ideas and his views.
Thank you, Michael, and thank you for that very thorough background that'll help me a lot. Just for those of you that are not aware, I'm Kelhofer from IFC. IFC is the private sector supporting institution of the World Bank Group. And we're a bit unique amongst development institutions because most development institutions are given capital and they give out subsidized loans or grants. IFC, as many of you may be aware, we're self-sustaining. Okay, so we actually need to make money or to make return on investment for tomorrow's loans, as well as paying our bills and keeping the lights on in the house. So we like to think of ourselves as much more commercially aligned with folks like VinaCapital and interests here in Vietnam. My own experience, I've been here now managing the Vietnam office as well as our office over in Cambodia and Laos for the last 6 years. We have about 70 staff here between offices in Hanoi and Ho Chi Minh City. Before that, I was in South Asia, in Bangladesh, and in Nepal and Bhutan. Before that, I was in West Africa. But I was also here 20 years ago when it was a bit different in Vietnam. And I like having that experience of being here both 20 years ago and today. I like to tell everybody I'm obviously an American. I'm an American from Pittsburgh. There are things I will never understand here. And the more time I'm here, the more that I realize that I will not understand. Okay, but I firmly agree with a lot of Mike's presentation. From my perspective, Vietnam, it's been delayed, but it is definitely not derailed. There's a big train of growth, of economic prosperity, of equity and sustainable development that is happening, and that is coming down the tracks. I like to share my views between what gives me relief, particularly over the last 4 months, what worries me and worries my credit committee, as well as sometimes what are some of the longer term needs, but also importantly opportunities for IFC and other folks on this call today. Just for some background, IFC last year, we did approximately 28 billion of investment globally. We did 1.5 billion in Vietnam, okay? About 2/3 of that was supply chain finance or working capital facilities, but a good 550 million of that was long-term finance, long-term loans, convertible equity. And obviously our KPIs are going up. We'd like to do more in Vietnam. We expect a larger program this coming year. And Vietnam is now clearly one of our top 10 programs for IFC globally. Now what gives me relief is not just the most recent COVID wave has been addressed. It was a tragic wave. A number of people have lost their lives. It caused significant disruptions. But every dark cloud has a silver lining. And the silver lining here is 5, 6, 7 months ago, we were wondering, what is the exit plan for Vietnam? When will it open up? When will we receive visitors? When will tourism reopening? Now, given the whole momentum on the whole vaccination campaign, and it's one of the most fastest vaccinating countries in the world, it's around 20% double jab now. We expect by January, things to start opening up and the country to be more fully vaccinated, but also Hanoi and Ho Chi Minh City are on track to be some of the most vaccinated cities in the world. I think here in Hanoi, we're around 96, 97% first jab and on track to have, similar numbers on the second jab. The idea of being 90, 95% vaccinated is unheard of globally. And I think that bodes well for Vietnam's ability to manage the new normal. But what also gives me relief, there was an outstanding currency issue, an accusation accusation of being an FX manipulator by U.S. Treasury, and then also a separate USTR issue that was addressed over recent months. So that whole dark cloud is passed. The whole macro situation, as Michael went into, the idea that Vietnam's running a fiscal surplus, which country in the world would be running a fiscal surplus in this current environment? It's super. The export demand remains strong. There is talk of folks leaving, but maybe my experience working in West Africa or Bangladesh, I sometimes wonder leaving, but I think that the desire to leave, the options of leaving have slowed down a bit. And unlike the financial crisis of 2009, 2010, where there were spillovers, some SOE and large enterprise problems in Vietnam, we haven't seen anything like that yet in the current crisis. We haven't seen an Evergrande, and we believe there are sufficient similar differences to not have anything like that here in Vietnam. Now, there are worries. I know worries for me, worries for my credit committee. We do worry there could be some sort of large enterprise surprise. We do worry what's going on in the neighbor in China with the slowdown. There has been some forbearance in the banking sector with regard to NPL classification. We're all watching that very closely. The whole global supply chain disruption, that's very real. I had some meetings with large manufacturers yesterday. The problem's not here in Vietnam. The problem's not even in Asia. The problem is getting some things here to Vietnam then to be re-exported. I get a little worried when a country's called a star, because that sometimes not everything works out. We did have an issue with regard to domestic migrants and domestic labor. That's been resolved over the last week or so. But I'd like to say that from our perspective, we see opportunities. The train is on the tracks. We'd like to see do more like 2 billion here next year. Look, Vietnam is 96 million people. It's basically the size of the eastern seaboard of the US, less Florida. That's an enormous market to work with. This domestic private sector opportunity is unique. Our IFC portfolio 20, 25 years ago was 95% foreign. Our IFC portfolio today is 90% local. I tell everybody, when I was here 20 years ago, I had a super driver. I came back 6 years ago, my driver now employs 1,000 people and has his own company. This growing domestic private sector and need not just for financing, but for standards provided by financiers like us, like VinaCapital, et cetera, is enormous. And the role this private sector is playing, not just in consumer, not just in manufacturing, but increasing like infrastructure. The LNG plant that VinaCapital is working on 10 years ago, that would have been done by Nestle. Today, those projects are being done by the private sector, both foreign and domestic. This is an enormous opportunity. I'll stop there, and I look forward to the panel discussion. Thank you very much.
Well, Kyle, thank you so much. And it's great to just have that outside perspective because, it's interesting also for Kyle with his tenure here with the IFC to really understand how it's evolved from public financing to private and public financing, which I think is a key and critical element for the future of Vietnam. Now I want to introduce a new colleague to the day. So this is Ismael, Pili, our head of research. So we talked about a little bit the VinaCapital update. Then Michael and Kyle spoke more on the macro side. You're the head of research here. As we think about what happens with the macro, I want to shift to you for a couple minutes. What is your view on the market? Because people are tuning in, they're saying, okay, this is great about the economy. What does that mean for the stock market? So first, kind of how has the market behaved kind of year to date and what's your outlook?
Sure. So the top-down assessment tends to lead markets. And in that regard, the favorable, assessment for Vietnam at the start of the year is reflected in the fact that the first half performance of the VNI was quite good. It was probably the best performing market in Asia, and it continues to do that. But that Delta variant that popped up, and it was quite persistent in the third quarter because of either the slow rollout of the vaccine, which of course has accelerated since, the curve coming off, and of course restrictions coming down, has led to that rebound to the fourth quarter as we see it. But of course, the third quarter, we actually saw a pullback. We saw the market pulled back by about 3.6%, which was lagging the rest of Southeast Asia. As I said, where we stand now looks fantastic. Things are back, things are abuzz. The air is not as clean as it used to be, but I suppose that's a reflection of the activity and the lighter restrictions that we've seen. And I think as far as our outlook for the fourth quarter this year, we do think that there's going to be momentum behind this. Part of this, of course, is the rebound or the recovery or the reopening trade, whatever you want to call it. And that tends to favor some of the values, cyclicals, even beta. And this is not unique to Vietnam. We've seen this elsewhere in every country that has gone through the same stage, and we are expecting the same thing to happen in the fourth quarter and perhaps extending into 2022.
That's a good follow-up. It's surprising. So when we look at Vietnam vis-a-vis the peer group, and actually while I ask you the question, I'll just say to the audience, so I've got an iPad here with questions that are in from the chat room. So if you have a question for Kyle or Ismael, Michael, just enter it in the chat function. I'll get it here on the iPad. So it surprised me, mostly because I'm in sales, I'm not an investment person, that Vietnam did great in 2015, did even 2020, and did even better in 2021, yet from a valuation perspective, it's actually still cheaper than the region. Why is that?
Well, partly because of the resiliency of the earnings itself. The Vietnamese companies have had relatively good guidance from the first half of this year, and a lot of them are reticent to actually pull that down. If you look at the Bloomberg consensus estimates, it's still looking at about 36% year-on-year growth for 2021. And that's actually quite impressive considering the fact that the third quarter, as I mentioned, was quite weak. Here at VinaCapital itself, we're taking a very conservative approach. We actually cut our numbers by roughly half. And to be honest, we're looking at anywhere from 16 to 20% for 2021. The upside, or perhaps the scope for upside might exist, but that also means that the lower base means that 2022 numbers should actually be quite resounding. And in that regard, we're looking at anywhere from 35 to 40%. As Eric mentioned, we're so close to the year end, we got to look at the 2022 valuations. And the PE at the moment is trading around 13 times, and that's pretty much the cheapest in Southeast Asia. And I'm talking about the ASEAN 5 in terms of valuations.
Interesting. So it is kind of counterintuitive. All right, here's a question that just came in from Quan Vu. So what sectors, industries do you expect to benefit most from the secular growth? So let's move this past the recovery trade and more to kind of the longer term secular trends, and maybe some of them are the same.
Sure. Some of the things that we run with are, of course, several themes. And the most obvious one could be anywhere from domestic recovery or consumption, the FDI, infrastructure. I would even throw in consolidation into that fray. But some of the key sectors that seems to touch on all of those themes are the banking sector, the real estate, and consumer. Part of that story is, of course, is a structural upturn that they're probably going to enjoy for years to come. And I think Mike and Kyle had highlighted some of these points with regards to how great the demographic dividends that this country will continue to enjoy, the modern retail trade or the modern retail change that we're expecting, the urbanization being this low at 37% that can only go up. I mean, we put all those things together, and the three sectors, which happens to be the biggest one in this market, are the ones that we think can actually enjoy that secular rise.
Terrific. Thank you. And there's another question that just came in, and this is I'll go to Kyle first and then Michael. You've both written about this over the past. So do you think the increase in FDI is due to investors or manufacturers perhaps moving away from China to Vietnam? And I'll add to that question, is that COVID related? Is it trade war related? Is it just wages related or supply chain? So there's a lot of reasons it could be. So Kyle, I'll turn that to you first.
I think the answer is really, from my perspective, really simple. It's all of the above, okay? And manufacturers relocating from many areas, but you also have consolidation of supply chains taking place too. I had lunch with a large manufacturer here that's been here 15 years, and 15 years ago, 95% of their inputs were imported and then processed and re-exported. Now 70% are sourced locally because their whole supply chain has followed them here, okay? So it's a mix of some of these anchor tenants relocating, but it's also this consolidation of supply chains, because what we've seen, particularly over the last year, is actually there's not just a cost reason for proximity, but also for a supply chain security. So I would say it's all of the above. And then I would layer on top some of these other options we had seen in the past, relocating to South Asia, relocating to Sub-Saharan Africa. People are maybe a bit hesitant on that versus maybe 2 years ago. So a lot of people that may think of going somewhere else are also still coming here. Thanks.
Yeah, I think the only thing I would add to Kyle's answer is that there's a component of shifting from China to here, but there's actually even a much bigger component of people choosing to come here instead of choosing to go to China. This is the bulk of it.
That's a great point. And I think the other part is also, as Michael, you've talked about in the past, I think it was last year, was the eagle building the nest, where maybe they would build one part of their supply chain or one part of their factory in Vietnam with a larger portion in another country, and now they're just building all of that here as they build kind of the manufacturing ecosystem. Okay.
But by the way, just to add one thing to what Kyle said, here's an interesting statistic about the anchor tenant, et cetera. So for example, when LG sets up a factory here, they rent however many hectares of industrial land. Actually, their suppliers rent another 3 to 4. So it really is a multiplier. Yeah.
All right, so a question just came in. I think this is there's another one, just move it down. Do you think Vietnam and Ho Chi Minh City in particular will recover more slowly than the rest of the world after COVID-19? I ask that because I have a very specific perspective of no. I think we're going to bounce back faster, but
It's clearly going to be faster. Yeah, I mean, we have a temporary issue at the moment where the factories in the greater Ho Chi Minh City area, about a third of them are facing labor shortages, because literally when we opened up, people had went back to their hometowns because they haven't been there for so long. I think that issue will probably take maybe 2 months or so to resolve, and they'll come streaming back, and then things will get back to normal pretty quickly. Yeah.
Any comments from either of you about that? Or?
No, I think it's also with regards to the market. The sentiment has drastically improved. You just have to walk around the street and basically look out for your own safety trying to cross that road. The bikes are back. The air, as I mentioned earlier, is a little bit more polluted. But that all reflects a greater economic and business activity that's at hand at the moment. And I think that will have to translate eventually to corporate earnings. And of course, with corporate earnings, we hope that would guide the market higher.
Yeah, it is interesting. We've talked about this renewed sense of optimism and enthusiasm for those of us that are here in Ho Chi Minh. We really had severe lockdowns. I mean, it was barriers on the streets. I mean, it was quite intense for people that even for people that grew up here. And now you go outside. I left work last night, and you would not know that it was a Monday night. I mean, there were thousands and thousands of people on Wen Hui, which is the walking street, which is where our office is. And while everyone's wearing masks, the kids have the toys and their whole families out on a Monday night because people are just so energized. All right, question for anybody.
Actually, Eric, one last one to layer on top of that is maybe we forgot, but for 18 months now, we haven't really had tourism in Vietnam.
Yeah.
And pre-COVID, this was 9% of GDP. And so one of the outcomes of this whole rapid vaccination campaign and result of the most recent outbreak is tourism's going to start up earlier than we may have expected 6 months ago. Okay,
Yeah.
So now you're going to layer on top, maybe not the full 9% in 2022, but a share of that. So in addition to what we had pre-Delta, we're going to have the tourism back quicker, and I think that's why it's going to be even faster.
It's a great point, Michael. I know you.
Yeah, I'm expecting at least 2 percentage point contribution to the GDP growth next year from tourism.
Yeah, and we've been historically at tourism at kind of zero for all of this year. So, all right, two. Okay, people keep asking questions. Okay, I'm going to actually mention 2 questions. So there's a question about light on liquidity in equity markets and foreign ownership limit. Another question about market increase. Just one on tomorrow's session. I have an interview with Mr. Tra Lei, who's the Chief Executive Officer, CEO of the Ho Chi Minh Stock Exchange. So rather than ask that today, we actually ask him that question tomorrow. We pre-recorded that as a government official. And then on the, Ismael, I'll ask you this. How much of the market increase you think is due to retail investors entering the market? Do you see this trend sustained now that Vietnam is reopened? Or do you think that money will kind of seek other avenues?
No, I think year to date, we're running about $850 million plus.
We have average daily trading volume.
Yes, ADT. That is the highest in Southeast Asia, with Thailand the only country that trades more than Vietnam. The retail investor or the retail base is now 92% of the market. And I don't expect that to be going away anytime soon. Oddly enough, you could argue that the foreign investors have been leaving the market, and now they're only 8% of that. But the structural appeal of this market suggests they're going to have to come back. That 8% is going to move up to 10, to 15, to 20, and this will institutionalize the whole place in the same way that we've seen this happen in Thailand and Taiwan. And the advent of the retail investor, the rise of the retail base, is similar to the Taiwanese story in the 80s, which continues to run as we speak. At the moment, I think the stats are suggesting that in Taiwan, it went from 3 to where we are now, 3% in terms of penetration of having brokerage accounts, to as high as 80%. So we have a lot more to go actually for that.
And that is important because, again, Ismael said it's 3%. So roughly as many brokerage accounts have been open in the last 18 months as had been open prior. So it basically doubled in the last 18 months. And one of the reasons, I'll tie it to a question that Chase came in, is about interest rates. Prior to COVID, 12-month term deposit rates at banks were roughly 10% or more. And so now they're around 6.5. And so if you could get 10% at the bank in 12 months, well, then why would you actually look at the equity market? Now when rates are 6% plus or minus, all of a sudden, people are looking for other channels. So the question came into, I'll ask the group here, do you think the SBV will raise interest rates anytime soon, given inflation risk, given oil prices, supply? I mean, there's lots of reasons they could or couldn't.
Yeah.
You have a view on interest rates?
Well, a couple things. First of all, they came out last week and said no more interest rate cuts this year. So that's done. I do think that inflation in Vietnam this year has been. We had the benefit of, we had the bad thing happen last year, which was the African swine fever, and then this year we've benefited from not having African swine fever. So that's kept a lid on inflation this year. I do think, unfortunately, inflation will be higher by about maybe 1 percentage point, a bit more than 1 percentage point. That having been said, policy interest rates in Vietnam are actually considerably above market levels. And policy rate is around 4%. Interbank rates are actually below 1% for a variety of reasons. So I don't think that they'll explicitly hike rates. I guess we're getting that question because last week Chile raised interest rates by much more than expected. A bunch of EMs have raised rates in the last couple of months. I don't think that's going to be a topic here, but yeah.
All right. Kyle, are you still with us? Because I see your name, but I can't see you anymore. Ismael, question is, can you share more about your investment in what sectors you're looking at? I know you touched on the three largest ones. Is there anything else that's, I don't want to say hidden, but that is another area of interest for you?
I mean, our research approach is actually on a bottom-up basis, so we actually don't overly focus on the sector. But if push against the wall and you're going to ask me what sectors do we like, I would have to go back to the banks, real estate, and consumers again. And the reason behind that is there's such a big runway with regards to these three sectors. The banks basically get their hands involved in everything, whether your theme is domestic consumption or recovery, infrastructure, FDI, consolidation, you name it, these guys are involved there. The urbanization angle that I just mentioned earlier, again, that benefits the property sector itself, and there's still a lot of pent-up demand for homes, household formation, people who actually can go beyond living within the nuclear family. Those things are quite promising. And then the consumer side, as I said, the modern retail advent, that whole thing is still coming. Maybe that has been accelerated because of the pandemic. A lot more mom and pops, unfortunately, may have to close up shop. But we do have the big shops, the more modern side, even some digitization, some e-commerce kicking in. So I'm quite optimistic on those three sectors.
I think for banks too, consumer credit as GDP is very low. Right. That's another secular.
Yeah, I would add that in terms of the number of people who actually have bank accounts, it's roughly in the 30 percentile range, low 30s. And if you look at consumer loans to GDP, it is along that same line, around 30-odd%. So a lot more to go.
So here's a question that came in that I'll go to Michael and Kyle. And so opinion on Vietnam's wage advantage regarding FDI inflow. How long do you think it sustains until the living standard improves and then Vietnam loses the competitive advantage? And as FDI sector contributes significantly to Vietnam's stock and Vietnam's GDP, what is the impact on the domestic sector as well as the stock market? So let's talk about the wage advantage.
Yeah,
right now it's about a quarter to a third of the wages of China.
Yeah.
How long does that last?
Yeah, so wage inflation here is about 7% a year, and by the way, in China is also around 7% a year. So theoretically, forever. But obviously, the China's wage inflation is going to, level off at some point. I thought about this a lot. I think a couple things. One is that the nature of the FDI story in Vietnam is, not to skirt the question, but it's changing a little bit in the sense that, and this was a topic we talked about in last year's conference a lot, that the FDI companies are helping to build out the local supply chains here. So it's not just strictly a wage question. If you just look at the pure wage, I guess the advantage would last probably about another 7 years or so. But we have this other factor kind of kicking in. That I think the FDI story has another 10 years plus to go in Vietnam, is my short answer to the question.
Kyle, do you have a perspective on that as well?
Agree with Michael. That's a medium, longer term issue. I think there are other areas for improvement in Vietnam. For instance, logistics are 50% more in China over here compared to China, and 100% more here compared to the West. And so there are other areas for cost reduction, and not just the whole labor advantage, but also the whole labor advantage issue. I think the other aspect of that is the whole skills and vocational. And this is one of those medium, longer term issues that we grapple with. But Vietnam, quite frankly, the educational skills base needs to be improved, full stop. Okay, they spend 1% to 2% of GDP sending kids overseas to be educated, and a lot of the best stay. There is a need for educational hubs, research hubs, and to build that whole skill base that can accompany that whole wage increase in parallel. So I think there are never elements to this, not just pure wages. Thanks.
Yeah, and it's a great point. We talk, in some of the other sessions, we're going to talk about logistics and improvement of infrastructure. So it's definitely something that we'll be discussing. Question comes up. We always ask, okay, so we're very excited. We feel the enthusiasm here in Ho Chi Minh, but what is the bear case? And so let's take COVID off the table, because certainly that wouldn't just be a Vietnam story, but we also, with the pace of vaccinations, feel pretty good about where we're going. Is there anything kind of outside of COVID that is keeping all of you up at night?
Yeah, one thing I'm a little bit concerned about is that we benefited tremendously from this demand for the stay-at-home goods, exports. Vietnam is going to have probably over 20% of GDP trade surplus with the U.S. this year. I mean, which is incredible. What does concern me a little bit is that and this is really more like a U.S. Specific issue than a Vietnam issue, but the purchases of durable goods were so much in last year that if you look at the University of Michigan, actually last Friday, the buying intentions for things like furniture, TV, whatever, has gone down simply because people bought so much. So that concerns me a little bit about how resilient will the demand for Vietnam's exports be from the U.S., particularly next year. Yeah.
Okay.
Sure. I think what worries me a bit would be some sort of surprise in some sort of large local corporate. Okay. And I don't have anyone in mind right now. Let me be clear on this. But the reality is in Vietnam, for some firms, there are some transparency issues. And that's why from an IFC perspective, we're a bit sector agnostic, but we're sponsor specific. Okay, and so it's about not which sector, but who we're doing business, and are we comfortable with their standards? Are we comfortable with their board? Are we comfortable with their corporate governance, et cetera, et cetera? So I think I'm more concerned about some sort of surprise. I don't see any. I don't expect any. But that's tend to been our problem in other emerging markets around the world. There tends to be surprise, and that's just a matter of then just keeping track of who you're doing business with.
All right, thank you. And there's another question came in. I'm going to say, Nancy, you're asking a question about real estate. I have a conversation with Hugh Doe, our head of real estate investments, on day 4. So rather than try to answer it, I'll ask that question to Hugh. So hopefully you can join us for day 4. I think it'd be a better answer from Hugh than from the economist and the research guy. Here's a question.
Although we are very bullish on the real estate market, though.
But
you'll get to hear that from Hugh.
I mean, the guy who does real estate development should talk about where to do real estate development. Okay, here's the question that come in. How do you think about state investment in 2022, 2023? Do you think it'll be a key driver for economic growth?
No, actually, what we see on the SOEs is that SOEs are still probably almost a third of GDP. But basically, how I see that story playing out is the private sector is probably growing at, pre-COVID, probably growing 9+% a year, and the SOE sector is just kind of bumbling along. One of the things that economists look at is something called the ICOR, Incremental Capital Output Ratio. Basically, long story short, how many dollars of CapEx do you have to do to get a dollar of output? For private sector, it's $3 to $4, and you get another dollar of stuff out. For the SOE sector, it's a much higher number, and so for the country as a whole, it ends up being sort of 5 times, 6 times.
Because when I think about the state, I actually think about the federal government. I don't think about the state. So I mean, in terms of infrastructure, things like that.
Oh, I'm sorry. I thought this was a question about SOEs.
So it said, how do you think about state investment in 2022, 2023?
Okay. Well, sorry about that. We expect 6 to 7% of GDP infrastructure spending going forward. Yeah.
That's a positive.
Yeah, absolutely.
So I'm going to listen to Mike and say I'm not sure we answered the right question.
Yeah, sorry.
And that we actually think state investment will be a key driver of economic growth.
Yeah, SOE investment, investment into infrastructure development, 6 to 7% of GDP for the next several years. Yeah.
I'm going to ask Kyle that question. You get penalized. Kyle?
Actually, it's a mixed question because it's good and it's bad. In that, on the one hand, it's great that the private sector has such a key role. I mean, SOEs are only 7% of the jobs in this country. But when as far as the state budget, you ask ourselves, in the midst of a crisis, why is the government running a surplus? This is when they should be doing stimuli. And so a lot of development partners, a lot of economists are trying to work with the government how to get some of this actual federal expenditures out the door. You have a lot of national development projects that are hung up for various reasons that could be developing critical infrastructure faster or creating jobs right now when you need jobs. And so I think they're trying to kind of oil the whole bureaucracy and get things to move a little faster, particularly under this prime minister, to get this needed public sector stimuli moving, particularly over the next 12 months.
Yeah, the question just came in. It's related to travel and opening up. It's really about, as we see it being easier to enter Vietnam, which it's still very, very difficult to enter Vietnam. Do we think that may spur on new development? Because people really haven't been able to come in here for the last year and a half to look at land, to look at property, to look at industrial parks, to look at manufacturing facilities. Will that be a catalyst, maybe it's a short-term bump or maybe longer, for either infrastructure spending from the private sector or just investment from overseas?
I think the previously planned FDI has been, I think the actual FDI inflows this year, the actual money flowing in is down about 3-4%, and that's because of this not being able to come here. So yeah, there'll be a bump next year of stuff that was already in the works, I think.
Right. Excellent. Here's one more question. We've passed the hour a little bit, but people keep asking good questions, so I guess as long as you ask, we'll answer. The economy is highly dependent on government and infrastructure spending. Is this too close to the China or government-led model?
Very good question.
and by the way, I think it's sometimes we always joke, sometimes we ask questions we know the answer to, sometimes we ask questions we don't.
This is actually a topic that I had intended to incorporate in the original presentation, but it ran too long. Long story short, so both China and Vietnam are pursuing the East Asian development model. We know that. China has a twist. They're doing something which is called the Gershengorn model. And so Gershengorn was a Russian economist.
Now you know why I cut this part.
It's not boring for an economist. I'm speaking to the fellow, economics geeks right now. So Gershengorn had the idea, like when you want to rev up your economy, really focus on investment. So investment. And what happens is initially your economy grows very fast, but then you end up with Evergrande, ghost cities, all that kind of stuff. That's not what Vietnam is doing. Vietnam is not doing the Gershengorn model. We're focused on consumption is 2/3 of GDP here. So basically, this is a very important difference between China and Vietnam.
So to translate that into non-economist speak, when you think of the East Asian model, whether it's Korea, Thailand, Singapore, even Japan in the 70s, it's really export-led growth. Where China took it is it became a consumer finance, real estate-led veneer that just kind of came unwound in the last couple of weeks.
And we're not doing that here.
No, for a variety of reasons we won't go into, but we did, Michael did publish a piece about 2 weeks ago on why Evergrande contagion shouldn't impact Vietnam, nor can Evergrande happen here, just because of a lot of reasons, including regulatory and rules within just the real estate sector specifically. All right, well, we've gone about an hour and 10 minutes, which is about 10 minutes over what we promised initially. Kyle, I want to say thank you so much for joining. It's great to have you join us for day one. To Ismael and Michael, thank you for joining. To everybody that dialed in and asked a question, I hope we got to all of them. I think we got to most of them. And I hope that you join us tomorrow, which will be day 2. We have an interview with Mr. Traley, the CEO of the Ho Chi Minh Stock Exchange, and then a conversation with Tu Nguyen and the portfolio managers for our 2 offshore funds, VVF and VAF. So thank you very much for joining us. We will post a replay of this on our website within 48 hours, and we look forward to speaking with you soon. Thank you very much.